Okay, everybody. So this is going to be the watch list for Tuesday, May 26th. And the reason for that is Monday is Memorial Day. So I hope you are all having an amazing Memorial Day weekend. And the market will be closed on Monday. So let's just jump into Tuesday through Friday. We'll take a look at a couple charts and let's go from there. So Monday, obviously, the market is closed. Tuesday, we don't really have much other than Case-Shiller Home Price Index and consumer confidence. Consumer confidence is at an all-time low. So I'm not expecting May to be any better than April, March, February, January. So we're going to continue to see this slide with gas prices that continue to keep going higher. It's becoming a real pain point for the majority of Americans. Wednesday, we have clear sledding, nothing scheduled. Then Thursday and Friday are going to be kind of heavy. So Thursday, we have jobless claims, durable good orders, and then new home sales. Okay. But Friday is really the numbers we're going to want to watch. GDP, that's going to be a very important number for Q1. It's going to be the second revision. Personal income, personal spending. We got the PCE. We also have the trade balance in goods. So we're going to have a big day on Friday. Now, the cool part is the only thing that's going to drop while the market is open is the Chicago Business Barometer, PMI. So just watch that, but everything else will be out for the bell before the bell rings, so you should be good there. Earnings are really slowing down. We got a couple big retail names that we're going to want to pay attention to, being Dick's Sporting Goods, Best Buy, Dell Computers, Kohl's. Dell hitting a new all-time high on the AI trade as of Friday. And then we're going to also have Costco. And then on the tech side, I think a couple interesting ones are going to be definitely Salesforce. So watching what's going to happen there with CRM, and then possibly Okta. Okay, and we'll take a look at a couple of those charts. But let's go ahead and start out with the ETFs, SPY and QQQ. Excuse me. We do have quite a ways down if we get below this 1 hour overall demand on SPY at 744.49. So that's what I'm going to be watching. I would definitely think that we could probably pull it, and I'm pulling it all the way back to the 4 hour pivot. That might be a little bit extreme, but if you just want to say, okay, well, on a 1 hour pivot, what might be a stopping point, and look at 741. So these are going to be your markers, 744, 41, 40, and 37 to the downside, okay? And now SPY has been weaker than QQQ. So if you're going to play puts, you want to play puts in SPY, and then play your calls in the Qs because technology has been holding up. And we pretty much have the exact same story here, right? We break below 715, next stop 1310, all the way down to 706. So I definitely think that there's a lot of room to the downside to be had if this market starts to lose some momentum. Now, on Friday, it did try to make and maintain new all-time highs, and it was not able to in SPY and QQQ. They were able to push the market higher for a brief moment, and then they sold into it over the last 2 hours into the market close. Apple was an absolute ripper on Friday. Fortunately, didn't get an entry on this one. But, we've been talking about this $300 price level holding, moved from 300 all the way up to a new all-time high of 311. So what would I watch on this one for a possible bounce? Well, 307.96, looks pretty decent. And then also, if we kind of figure out where this overall demand zone is to the pivot high, look at where the fib retracement comes to, 307.94. My level is 307.96. So if you come back into this golden zone, which is between the 50 and the 618, okay, this is where you potentially could watch for a bounce on market strength to go back up to that 311. Now, if we break this 618 fib zone, then definitely I think we're going back to 305, 304, and then possibly back down to 300. So for me, I want to leave this fib on my charts, and then we will be able to trade around it on Tuesday. Let's look at Microsoft. It had some weakness into consolidation. So you can see we got to push up, pull down, lower high, now just consolidation. This is one, personally, I'd stay away from. These are stocks that I don't like to trade because you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 hours of just consolidation in a $5 range. Yeah, I know you can scalp to the upside and scalp to the downside, but do you really have some clear directional bias of where it's going when the sellers are here and the buyers are here? I'd say I really don't think so. So get out of the overall box, right? Get a candle close below 415 to go short to 411 to possibly 408, or get back out of the box on the shorter term duration above 420 to go to 426. But Microsoft, I want to chart it because it has such a heavy weighting in QQQ as well as SPY. So I want to know, is it holding a level? Is it breaking a level to the upside? Is it breaking a level to the downside? Google is probably one of my favorite setups to the downside. Rationale for that is we have a gap fill down below, and this thing is starting to break the overall structure, okay? So when we take a look at this, and let's go and take a look at it on a 1 hour time frame, you'll see that they pushed it down here back on May 12th. They brought us back down to the same level on May 20th. They brought us back down to the same level on the 21st. Now they're bringing us back to it again on the 22nd. And it looks like, right, we closed right back above the level. But if we hold below this, so what I'm going to do is I'm going to add an alert right here to say, I want to know if this thing, and I'll watch it on Tuesday's open, for an open below this level that I think we could probably go short. And then this has a good amount of runway to the downside. Now, conversely, if we hold this level, 383, I think you could definitely look for calls going to the upside. You can see also in the last 10 minutes, quite a few buyers stepped in on a volume basis to push us back right back above that price level, right? That we were looking potentially, would it fail? Would it fail? Would it fail? Now, this is another great example of what I'm going to call is somewhat of a liquidity sweep, right? They'll push it right below the level that was being defended to trick everybody into going puts, and then they rally it higher to the upside. So this is your level that you're going to want to watch for Google. Let's take a look at Meta. Nothing going on here as well. Just a lot of consolidation. I've been talking about this for weeks, and there's really, in my opinion, not a lot of great setups because buyers and sellers are constantly on top of one another. So for me personally, I would rather just say, I'm going to steer clear of this thing. So let's look at Amazon instead. Amazon breaking below our price level. Okay, this one, we have a fair amount of room to the downside. Now, what I did do on this one is I took a pivot low to a pivot high to figure out where might this bounce. Ironically, in the golden zone, which is also where we have a candle wick low on a 4 hour time frame. So if we open below 266.96, for me personally, I do like the ability for us to take puts to go lower back at least to this overall Fibonacci retracement. Now, you might hit a couple snags along the way, but you could see when it comes to supply and demand, there's nothing really holding this up, right? Sellers are up here, buyers are down here from an institutional level perspective. Where would I want to watch my, overall mile markers? Well, I'd want to get below this 264, okay, which is this candle pivot to give me further continuation to the downside. So that's how I would trade Amazon. And I'm going to put that on my watch list as well. So I have Google and I have Amazon. Let's take a look at Nvidia. Nvidia had earnings and basically they sold it off, right? I mean, and the problem is it's not getting the alpha that the other stocks are getting. And people are like, all right, well, I don't see this going to 240, 250, 260. So I want to jump into something where I can get the, the overall alpha and really ride this higher. So we need to hold 213 below 211, definitely puts. Okay. Now, this is a 4 hour zone. This is a 3 hour zone. So I would be patient. So if I'm going to break a level, I want to break this level here for puts. So I have an alert now below 211.23 to take us all the way back down to 203.95. AMD, super strong, right? Gap fill below, they're holding this up. So they're rotating money out of Nvidia into AMD because this is the one that's giving you way more alpha to the upside. Now, these calls and puts are quite expensive, so if you're going to trade this, make sure you have a solid break below a higher time frame, i.e. a 4 hour, right? And you get a 5-minute candle close, a retracement, and then go lower. But for AMD, 466.07 is my number. Intel. This one, fair amount of pullback, not a ton, and then we're running right back up into resistance. So on this one, again, contracts are going to be a little bit cheaper. I think the euphoria, eventually runs off on this thing. Volume, for all intents and purposes, is coming down as it's going higher, okay? Now, if we're going to take puts, I want it to push back up into the overall supply. And I'd probably watch this candle wick right here on the 4 hour to say, as long as we can't exceed this, then I would be interested in a potential put trade back down to 113. Palantir, we played this one on Friday. We got a nice push higher. Unfortunately, you had to trail your stop because we got no continuation, but we did get a break above our price level, which was lower at about 137, and I was looking for it to keep running all the way up to 144. We got the pop, they sold it off, and just, again, nothing, right? It's the software stocks like Palantir, ServiceNow, Microsoft. They cannot hold a bid, and that's a problem, right? So when you're trading these, and look at the volatility on this candle. I mean, this is crazy that you're going from 134 all the way up to 139 with no change in essentially price, right? I mean, so the body, right? This is the open, the close. This is the open, this is the close. You are holding right on top of one another. So Palantir possibly... let me go to a lower level. Let's see where I would really want it to pull back here to this 136 before I'd be willing to go long. Below 136, puts back down to 134. So this is another one. What we can do is just go ahead and let's add an alert and let's see what comes into play. Now, mind you, on a 1 hour time frame, this thing was squeezing into the close. So that's where I would like a pullback to go long. Let's just throw a fib on this real quick while we're here and just let's see where we line up. And again, pulling back again to the 50 fib, also price level alignment on a 1 hour time frame. We are in demand. Where would my stop loss be if we had a candle close below 135.63? We ideally, right, a higher risk trade is take your call entry when it touches the 50 fib. You got to stay in the trade until you get a candle close below the 618 fib. But this thing, knowing that we're squeezing, potentially goes higher back to the upside. So we'll just have to watch the overall market momentum. Let me just check another couple time frames here for you. Yeah, on a 1 hour squeeze, usually pretty solid, okay? So, and then you can see where it was squeezing before here, and that's where we got the volatility and the push to the upside. Oh, let's take a look at Tesla. So this one, I think directionally, obviously we're still moving to the upside. As long as we hold 423.88, potentially calls on this one, although I would like to get a little bit more of a pullback and some overall confirmation that they're going to keep bidding this higher. Rationalization for why this is moving up is not because of their numbers or their production, but it's that when Elon Musk launches SpaceX and the IPO is valid, all the analysts are saying, don't buy SpaceX, buy Tesla, because he's just going to roll Tesla directly into SpaceX, okay? And so therefore, that's how you would benefit. So we do have 4 hour candle wick lows. That's what I'd be watching to go ahead and take your bounce. If you get above 431.51, then definitely calls for the gap fill to the upside. And then this thing probably could run back up into the 450s. So I think Tesla has some good potential. Let's take a look at two airlines. One of them, first and foremost, is going to be Delta. So if everything gets resolved in the Middle East and gas prices come down, these are good trading stocks, right? They're not good to own because of all the volatility. But here's some overall price levels on what I'd be watching on Delta. Now, this was a prior all-time high for Delta that it rejected on Friday with quite the big selling wick. So I would not go long until we could hold above this 76.38 to potentially go to the upside. But also, if you come back down to 74.26, possibly calls. Now, mind you, we only have 3 1 hour demand zones, not super strong. So again, get below 74.26. This is what we like to trade. take your put trade, ride it all the way back down into the 60s. So again, add an alert here. I'll watch Delta, right? I'm not as much interested in calls as I am a bounce here or potentially puts. The other airline is going to be UAL, United Airlines, which was, again, over $100 stock. We're kind of, just in this consolidation, although this trend does appear to be somewhat right now to the downside, right? So we'll want to watch and see, are they going to be able to break this trend line one way or the other? But you can see how they're holding 87, 87, 87, 87, right? We dip below it. We get down to 84. I don't know that you're going to get a push all the way back down to 84 for some calls. So really that, 87 and change, if we want to be a little bit more conservative, let's just go ahead and use let's look at a 4-hour and let's look at a pivot low on this. And this is going to be one of your safest bets, okay, is going to be, down here toward 88 and change. You're getting into 1-day demand, 4-hour, 3-hour, and just anywhere in here, that they'll pick it up and take it higher. Same thing here. You can see they did the same thing on April 29th. Huge rally higher. Come down here, huge rally higher. So what we want to see is, can we at least get some kind of a pullback to go long to break this upside trend line? And where would another good buy point be? Again, let's do the exact same thing. Let's throw a fib, pivot low, pivot high. Let's see where we line up. Okay, 95.30. Where's my price level? 95.26. I mean, you're 4 cents away. It's also this 4-hour candle wick low. This is going to be your ideal buy to continue this one higher. So I'm going to leave that pivot on there. The one I would not trade is American Airlines. The stock is just frankly too cheap. You got to buy in the money, and it's not investor grade. I mean, it's crap. So I'd rather trade a $70 stock, $100 stock. I do not want to trade a $14 stock. Okay, a couple that are announcing earnings, CRM. This one has just been beaten down. I think Benioff has a lot of explaining to do. But again, we keep coming down to this 171 level here, and we do get some short sprint buyers. What I don't like is the exact same thing. We are in a downtrend. Now, we do have earnings, okay, coming up. So let's just take a look at this on a trend line basis. And you can kind of see what we want to watch for is, do they hold this 177 and then finally break us to the upside? We have a pretty solid foundation here at 164. So if you can get a pullback to possibly 177 with some momentum, again, same thing as before. We want to be buying down here and trading through the black space up into where the actual sellers are. We don't want to be trading, if we can help it, where we have a tremendous amount of overlap. Dell, I mentioned this one in the opening narrative. You got to let earnings come out. There's nothing you can do with this thing. I mean, this thing as of the last earnings, I think was like at $100 the last time they announced earnings. In February. The stock was trading at $121. It's now $300. It's up 250%. We are not chasing this, right? Let this thing do whatever it's going to do. Mark your levels and then play it accordingly. And then the only last one I want to look at, I think today that's really worthwhile, is probably Costco. I think there's some possible buying opportunity in this one. So this one came down after Walmart announced earnings, and Walmart started to talk about the concern about inflation and the overall consumer. You can see that we were holding in the past this prior high here, right? They wicked it up. They closed above it for a moment and then wicked hard down off of it, We get a close or a candle below 127.92 on Tuesday. This is 1 hour demand. So if you want to be ultra conservative, right, what you can do is just wait for this price level here to break, 1,022.61, and then go ahead and take your put trade. Otherwise, if we get some market strength back to the upside and consumer confidence for some weird reason comes in strong, again, do the exact same thing. So let's figure out where we're at. Let me just hide this so I can get a better candle view. But let's just take a pivot low to the pivot high and look at where we're holding. We're holding at a former resistance level. You're also holding the 618 fib, okay? Now, if we break this 618 fib, the likelihood for more downside pressure is pretty good. What I don't like about puts is that they're holding it at this level for 1, 2, 3, 4, 5, 6 hours, right? So that's kind of telling you that the sellers are not stepping in heavy enough to overwhelm the bulls, okay? So again, price level back above 128. We hold the 618 fib. We consolidate in here and then look to go higher back up to this gap fill. So that's kind of how I would trade the market this week. Again, Monday, market's closed. Iceman will be trading live with you guys on Tuesday. I'll be with you on Wednesday. And let's just see what the week brings us. So with that, again, everybody, happy Memorial Day, and we'll talk soon. Take care. Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly Watchlist emails to get early access before the video drops here on YouTube. See you next time.